Everyone, welcome to this month's Crypto Roundtable with the Musketeers in-house. We've got Tristan and Sammy down the bottom, our head analyst. Really excited to join you. We're going to share and pull back the curtain on what we're seeing in the market, some strategy ideas, and follow up with some general chat. And Tristan released an awesome fundamental analysis piece that he was telling us about just before we hit the record button. I always wish that we just come in and hit record because we have such amazing chats, and then we hit record and it's like a repeat of what we just spoke about. So let's jump into it anyway. So I think the first thing to pull up is everyone wants to understand what happened recently with a big flush down in pricing. I know that that's caught a lot of people maybe off guard, and we can talk about different strategies and ideas. But Sammy, why don't you take us through this on a higher level, because this isn't the first time that we've seen this in a very recent amount of time. And my first comment was manufactured. That was the first thing that came to mind when I saw this, because it just seems very questionable and consistent. And I know that people do pay news outlets to move the market. That's the reality of the world that we live in now, and there's people that are happy to take payouts to do that kind of shit. So why don't you take us through that, Sammy?
Yeah, it feels like pure manipulation, doesn't it? Yeah, so just a timeline of events. If you're watching the markets last night, we had a positive CPI print, which came in lower than forecast, and so the market was really starting to run. And then all of a sudden, we saw a heck of a dump. You can see there we ran up, and then the big wick the downside. And if you sort of have a look at what happened on Twitter, and I was up at 3 a.m. looking at it because I couldn't believe what was going on. A tweet had come out suggesting that the US government wallets that were sort of earmarked that the US government had access to, or they own from the Silk Road days when they were doing a lot of seizing of those assets, that was starting to move. And a tweet went out. I think Whale Wire caught it. A few other outlets got it. It just went all over Twitter. And then we saw a massive dump on the market because I think people were quite scared that the US government was about to dump another tranche of their big hoard, which I think it's over 200 and something thousand. I think they own, one of the highest amounts of Bitcoin out there, and they were liquidating it. But it turned out to be fake news. So there is a Twitter account. If you're watching this, guys, you can go to, I think it's called Arkham. I can't quite remember if there's anything else to that. It could be just Arkham, like the Arkham Asylum in Batman. And they monitor these wallets that supposedly the US government has ownership of that, oh, there it is, Joe. You missed it. Just go to the scroll down again. They monitor these wallets that supposedly have the Bitcoin that was seized via the Silk Road, which was that, Tristan maybe could explain it better, but my understanding was it was a sort of an underground drug trafficking movement that you could pay for drugs with Bitcoin back in the day when it was just in its infancy. So the US government sees all that, and it's there, and they have a lot, and people are very scared that the US government's going to dump on it based on recent talk around regulation and all this kind of stuff. So it looks like, though, because it was potentially fake, that most of this price dump should get retraced. And I think we had a reasonable run back up this morning, but again, now we're just sort of back into the technical levels where we just have to wait for support and what it does.
Yeah, it's interesting. Thanks for sharing that, Sammy. It's very interesting to see. Once is a learning lesson, twice is clearly there's something behind this that's happening that is pushing someone to do this. And what I expect is people were waiting for the CPI print. CPI print comes out positive. People go long in futures markets. Manipulative news comes out to cause the flush. What would have happened? This 4 hour would have closed up here. People would have been like, okay, we're on 29K, no problem. And then bang, news gets released, market completely manipulated, and just an almighty flush. That start, the candle opens here and went down to, that's a 4.7%. That would have absolutely destroyed longs in the markets, which I believe would have piled in with a close above the 4 hour 21 moving average level. Very, very interesting to see. And that's why you have to be very careful in this market, that you've got certain conditions that you operate by to execute a certain trade. Now, what we're seeing in recent times, and I think when I say this, a lot of people will probably nod, people made money up here, people made money on the move up here, and then people have just been getting absolutely chopped out all through here in different buy and sell levels where you see the market moving, you think, okay, this is bullish, and then all of a sudden, there's like a 10% market drop out of nowhere that just happens, which was the first time I believe that fake news came out. Then the market rebounds, and there's other news that comes out. Then we get this flush down, and it's just really causing a lot of pain, and it's almost torment for people in the market right now. So if you are investing in the market, just be very mindful of your strategy. We're always consistent around having long-term holdings so you don't overexpose yourself and try and get too clever. I always use the example, if you've got 10 Bitcoin and you're actively trading 10 Bitcoin equivalent through altcoins and everything in between at one time, and that's your entire portfolio, you're setting yourself up for disaster. The point of separating and segregating parts of your portfolio is your long-term, you try and average in your best price levels. Your active, you try and reduce those price levels and manage risk. There will be a certain point and a certain threshold of price that if this is hit and we close below this, that's enough confirmation for you to say, okay, I can start offloading some of my long-term holdings now and find reduced entry points, which I'll map out for you in a second. I can share an overview and ideas as to what we have here. But that's just something that I would bear in mind, because I just think people are getting chopped up too much right now. And I did a video for the masterminds the other day, and I called it a death by 1,000 cuts. The end of cycle is a 12-month rundown. That's very consistent, has been for many, many years now. And that's like getting your head chopped off, you might say, in comparison to the point of stage of market where we're at, which is death by 1,000 cuts. And a lot of people will lose money, significant money, in these times just as much as they would on a strong 12-month downturn by having the wrong strategies in place. So here's just some ideas of what we've mapped out. So you can see the other day we had a 4-hour close that came down to what we would say the point of danger. I think anywhere below that 26,800, I think below there is an area of danger. And you can see that we almost tagged that. We didn't tag that. But a lot of people would have had stops at 26,900 just at this level here. And they would have caught the end of that wick. The wicks come to grab liquidity. Tristan did a great write-up to talk through different scenarios of what could happen. And you hit the nail on the head. You said there was going to be a liquidity grab. That's exactly what happened. Fake news, liquidity grab, flush the future, the long people out, wreck stop losses, a number of people that are spot traders, and then rebound in price. And it's like all these people are now left feeling uncertain, shallow in their pockets, and fearful. And what does that do? It causes them to do nothing. They sit on the sidelines thinking, okay, shit, I've got this wrong. I made the wrong move. What should I do now? I'm just going to sit there and wait. And what happens? The market will often rebound and you'll chase the price up. And then what happens? You end up buying here just under the point of kind of no return at the just right under really heavy resistance, because you're like, fuck, the price has gone up 5%, 10%. I've missed the move. You buy here, and then what does it do? It retraces all the way back down. And you can see that here, like it's happened once, it's happened twice, probably going to happen a third time maybe before we find stability and really break through. So you just have to know the levels, be consistent to enter in. And I just finished, Sammy, before I let you jump in. What we're looking for is a couple of 4-hour closes below that really 28, 26.8, 25, 26.5 region. Couple of closes in there to say, okay, this is definitely a confirmation of a move to the downside. And then we've got our strategy of entry point 1, entry point 2, entry point 3, entry point 4, and layered buys within that, how much capital we're going to allocate on each level. And 80% of our reinvestment at that point will be into Bitcoin, and 20% will be to Litecoin, and that's it. We're investing a lot more money than what most people is, so our risk profile will be very different. But some people might say, well, Arbitrum's down at $1 maybe, or Matic's down at 80 cents or something, potentially, if we get down to those levels, and you might want to start accumulating some altcoins for your longer term horizon. What I will say is give respect to Bitcoin. It deserves respect. It's always been one of the highest performers out of this condition of market, this condition in particular, where we have the bottoming and then the move back up. Bitcoin has statistically, based on historical data, outperformed pretty much every altcoin out there. If it's the lowest risk and it's proven to have the highest performance, does it make sense to be investing in altcoins outside right now? I would suggest not. You're on your own path. You do as you please. But I would say it makes a lot of sense to be holding into something like Bitcoin through these market downturns and rebounds. That's where the liquidity goes. That's where it's a little bit less volatile. Some of the alts, you'll get stopped out for fun because there might be a couple of 100 million being traded instead of billions. So it makes a really significant difference. That's all I really wanted to say, I think, in this session. I think that's really important. And if you are a VIP or a graduate client, then I'll certainly be recapping on this in a bit more depth on Friday. I kind of let the cat out of the bag, and I've got to find more material now for Friday. But it's I think it's just something that's really important to be said now. Sam, was there something that you wanted to say, mate, or anything that you want to add over the top of this?
Yeah, you covered a lot of really good ground there. I was going to mention that this is still such a low liquidity environment. You can see it by what has happened here. That big move down on some negative, Twitter news forced the market down 5%. And this is, in my eyes, it's just another reason to really, for 99% of people, avoid leverage at all costs in this market environment, because this is just like a stop loss leverage hunt killer. And we saw that open interest was essentially wiped out overnight and has reset, and it's now negative. So now shorts are paying longs now to be in positions, which is really interesting that we're at support. So we'll see where that goes. But yeah, just generally how I'm kind of looking at it, and just to back up what Joe says, is when we saw Bitcoin drop 5%, altcoins got absolutely smashed, and they went back to sort of levels that, we're into those bigger drawdowns we saw in the last couple of weeks. So again, the liquidity is light. It's light in Bitcoin, which means it's doubly so for the altcoins. And how we can kind of track how that is going as well is keep an eye on, Bitcoin dominance, because the Bitcoin dominance chart is sort of showing that Bitcoin is in its zenith right now. And you really don't want to be, you can look into the altcoins, and yeah, there is a bit of reward there, but it is the higher risk play because of the lack of liquidity. So Bitcoin for mine is looking, pretty good for continued dominance going into this little period. But yeah, I think you just need to be careful and watch these levels because, like you said, Joe, if it closes beneath that 26.5 for any length of time, we could very well go down and visit those lower levels, maybe the 200-week moving average, a little bit lower than 25,000. That's absolutely on the cards. But it was encouraging overnight. It was encouraging overnight to see the CPI come in a little bit lower. So it's clear the trend is down. But then again, core CPI was pretty stagnant. And what I think we need to be mindful of now is CPI inflation is now lower than the federal funds rate. So it's not long that imbalance kind of stays, and we've seen an inversion for a little while as well. But when that core CPI, which is at 5.5%, I believe, and the federal funds rate is at 5.25%, if I'm not mistaken. As soon as that core CPI begins to dip under the federal funds rate, that's when I would really think that we're at the real back end of this, and the Fed's likely to pause. So I think we're approaching that point now. And I think Tristan and I have had some really good convos about this, that we were kind of on the same page in the sense that this first few months of 2023 has been really positive. It's been really fantastic, caught a lot of people off guard. But it feels like this whole phase has been really pricing in the potential pause. The markets have been rallying into that. And it's all kind of all now markets are very forward looking, they're very efficient. And now we're kind of looking towards, potential pause and a pivot. So I think markets eventually, and pretty soon, are going to start pricing in that bad data of the recession potentially coming, and that pivot where generally we see a bit of a fall over in stock. So Yeah, it's going to be, and you see there, yeah, the funding rates. Sorry, the funding rates, is that the futures for the
No, interest
potential pause?
rate. Yep.
Is that the interest?
Yeah,
Yeah, so that's the probabilities of them going for a pause, isn't it? 91.5% in the futures
on
markets.
the
That's right.
14th of
Yeah,
June. Yep.
yeah.
Um,
So yeah, very
yeah,
interesting.
a couple of things that I just want to echo that Sammy said. So markets are forward looking. What you see in the price today isn't based on what's happening today. And the flushes are like if there's a bad news release and the market flushes, that's based on a current event. But typically, the pricing of the market is forward looking 6 to 12 months, saying, okay, we're likely to get a pause in June. We start pricing that in already, and we start actually pricing in a pivot and a turn on that. So that's one thing that I wanted to confirm. The second thing that I wanted to confirm is these 4 hour candles. Don't trade based off of one, trade off based of two, because what often happens is there's these giant pincer candles that one goes up and then one comes down, or in reverse. You see it quite often. One goes up, one comes down. You just got to be very careful. You can see it here. One goes up and the strong one sold all the way down. So I'm just very mindful of watching the 4 hour candles and not seeing one and having ultimate confirmation on it. I don't want to wait for a day because a day's too long for a close, because there's many hours in a day, 24. And 24, which is a number of these candles. What's that? Six of these is one day. So that's a lot of information, a lot of trading, a lot of market movements that can happen. So I think when the market is quite volatile, you want to be looking for 2 4 hour confirmations rather than a daily confirmation, and certainly not one 4 hour confirmation, because it captures a lot of investors off board. It is my general thinking. Tristan, let's hand over.
Yeah, I'd love to just quickly chip in because I agree with everything that yourself and Scoop has said, but figured it might be worth just sort of mentioning like Peppy. So I know you guys have probably spoken about it in other videos, but what we tend to observe when you see a meme coin pretty much absolutely go off its head is we're seeing sort of the natural outcome of the liquidity flow cycle. So it all starts with Bitcoin, which is where Joe and Sam have rightly said is what you should be looking at right now. But once people start taking profits out of Bitcoin, they'll go into Ethereum or take profits from Ethereum. They'll then go into high cap alts. Once they're out of the high cap alts, they'll go into the mid range. And then once they've consolidated some gains, they will literally gamble. Like, I know that sounds like reckless, but when people make the kinds of gains that you can make in crypto, it does turn into literal gambles. And if you looked at the meme coin like Peppy, which go to its website, which I'm sure you all have, it literally just says, yeah, I do nothing. I'm a meme coin. Like, I'm literally just a coin for a meme. And that thing just pumped insanely. And sure enough, what have we seen? What Joe's looking at now, what's that? How big a drawback is that from the top there, Joe? I think it's about maybe 30 to 50% or something.
Jeez.
60. So it's 63% down. So what we're seeing pretty much is a confirmation that if we've gone through the Bitcoin, Ethereum, take it profiting into large caps, mid caps, and to low caps where people are effectively gambling, what typically happens, and in bull markets, for any of you guys, you know, any of the clients that have been in a bull market, it's effectively this process like on steroids for pretty much uninterrupted for 6 to 12 months. So when you see something like this, the initial pump of Peppy was encouraging in a sense that it should have been a clear red flag for a lot of people in terms of how to manage your assets in the broader market. So I've been telling, again, I agree, like all the observations that Scoop and Joe have shared are absolutely spot on. Where I've gotten, so what I'm telling the masterminds is that I do think we'll see 25K before we see 33K. Of course, I could be wrong, but my observation for that is predicated on events like this. When you see just an absolute shit coin, you go, right, okay, the liquidity flow cycle needs to reset now. Like, and people are going to, you know, start getting, you know, like Joe said, getting a bit hurt by the chop. So I think just being really mindful and just consolidating into those decent cap alts and being really clear on your limits and having a clear sort of thesis will be really important. This isn't the time, because Pepe did a pump, that every meme coin's now going to run, and some other ones did, but it's just, I just don't think it's the time for that. And it's definitely something I think is worth explicitly saying, like, don't get caught up in meme coins. Once we get back to a bull market, meme away, go nuts. Like, after, of course, you've consolidated reasonable profits and you're protecting yourself, and it's no different than putting a $50 note into a poker machine at the pub for you, then fine. Like, but yeah, don't be putting the bank onto meme coins, because what we're seeing on Pepe, this just repeats time and time again. We could touch on SafeMoon from the last market. You know, Doge, SHIB, except for Doge, SHIB, they're more sort of mainstay sort of assets now, I guess you would say, because they've sort of got, you know, proven track record with the TA and like maintain relatively good liquidity despite being meme coins. But yeah, this isn't the time to be gambling, is ultimately what I wanted to say.
Yeah, and that chart looks pretty
Meanwhile,
bad. Oh.
It looks pretty bad, but I think there's a good entry position where you could manage a risk very tightly. there is. I was looking at it, I was like,
yeah,
oh,
look,
lose that support level, and she's going to Hades. I think, like, you think about like all the people that made. No, I know, I hear what you're saying, Joe. I'm just sort of thinking out loud so everyone can kind of understand. There were people that put in, I think, like a couple of $100, and they walked away, or, you know, still in it with 500 ETH, you know, 550 ETH.
That's nuts.
Like, these are the kind of people that, you know, you see these kind of charts at the top. You think, gee, if they just sort of sell half that or most of that at any point up here, I mean, it's going to get crushed. And no matter and I hear that I've actually heard that Bybit and whatnot has actually pretty decent liquidity in terms of derivatives. So if this thing gets really going, you know, it's going to have that inertia to the downside.
Well, you just made like a perfect example. Yeah. Like it's a perfect way to put it, because you'll have people that, like I say, if it's a low cap, you don't need to spend a lot to make a lot. Like you can put $100 onto something that's more or less brand new, and you just happen to catch it, say this Pepe token, and then it gets $1 billion market cap, and you're like, oh, cool, I'm like 10,000x, like I'm out of here. Like, but the impact of someone selling that is like up 10,000x is like significant to the market. So people just need to be aware of that as well. Like, especially because, you know, some people see a chart and just think it's going to go up forever. But you've always got someone sort of sitting there after a good performance in any coin. It doesn't need to just be a meme coin, but anyone that's like sitting in like multipliers ahead of what they put in, you know, they're going to have a significant impact when they take that out of the market. But I guess just on Pepe as a side note, like I actually think it is for those that dive into Telegram and Discord channels and all that kind of stuff, like they know what Pepe is. It was always going to happen. This meme was always going to pump. So, you know, I would say that it is one that you would you know, for a future bull market, you know, you might expose yourself to Pepe, but for the love of God, don't make it like a core aspect of like your investing. Like it's like you don't want to be one of those people that are like, oh, I'm 20% allocated to Bitcoin and 80% in Pepe. Like, you know, like you don't want to do that. Like,
I'm chasing gains.
Yeah, exactly. Chasing gains.
Make meme coins great again.
Yeah, man. Yeah, like I didn't see that one. Like, but you know, it's the same thing with, you know, SHIB and Doge, and even things like XRP, where you've just got like a really vibrant sort of, well, at least a really engaged community, and they're very vocal. So the power of that, and again, I've spoken about that in the SHIB FA before, where it was just effectively the community totally just drove that SHIB project. They just had a couple of rumors that Vitalik Buterin might have been somehow involved because he got a share of the tokens, and from there they all just ran with it. And
he's probably going to dump like he did. He's probably going to dump it like he did with Shiba Inu and then give it to charity again.
Yeah, and then
hate being sent all these.
Well, I think they gave half of that back. I think I think it was either they couldn't offload that much SHIB or something. So I think he actually had that a part of that return to him, which is pretty funny. But yeah, as you can see, meme coin, no ambition to do anything whatsoever. So there is a time where, because as everyone knows, I love the fundamentals, but there are times where you just sort of go, okay, it doesn't matter what these guys are trying to do here. So with a token like this, and again, I've still got to tinker with the document. It's pretty comprehensive with the low cap, how to analyze a low cap coin. But when you come across something like this that just, you know, is just pure meme coin, like it says literally there in writing that Joe just highlighted, there's no intrinsic value to it. If the meme's hype enough and people want to throw money at it, they will. It just depends where you're standing at the time. People start running.
Completely useless.
Yeah.
I didn't, when you said that it was on the website, I didn't actually think it was on the website like this. It's actually on the website.
It's useless. Yeah. I actually chuckled when I read that. I went, oh, okay, that's actually kind of a refreshing level of honesty.
Yeah.
As opposed to,
I'm going to buy that.
Be like, we're not shit, but I mean, we're shit now, but like, you know, we're going to be better, we promise. Like, but no, these guys are just like, yeah, no, we haven't really got that much planned apart from just hyping it. But the meme does the work for it. So, which might even, you know, circle back to things like, you know, some of the sport coins and stuff, like football team coins and things like that, where it's the fan base coins. You know, it's like it's the same kind of sentiment. It's like it's just pure, you know, it's just pure like people just being sentimental towards the actual meme or what it's supposed to stand for. And I suppose when you think about that kind of stuff, it's kind of interesting because it's very psychological. But yeah, as far as I'm concerned, in the markets as they are now, like we just don't have a bull market volume. We haven't really, even with the rise of Bitcoin in recent times, it hasn't, like, you know, if anyone can remember, we're seeing, you know, 150 billion, $200 billion trading volume like per day. Like that's what a bull market looked like. Whereas these days, you know, you're seeing between 30 and, you know, maybe 60 when Pepe was coming in, there was a couple of 100 million days, and again, people just hyped in. But as soon as you see the drawbacks like we've seen, that's when you know there's a high chance that the cycle has reset itself. So back to Bitcoin and Ethereum, I reckon.
I was just blown away by the 24-hour volume, ranked 16th, which I'm sure was higher at one point. Binance put through 111 million in the last 24 hours, and it's insane. I was talking to someone the other day about exchanges. Can't remember who it was, and they were like, "Oh yeah, there's a ton of money in exchanges." Maybe I was looking at the Hong Kong stuff because Hong Kong are opening up as of June 1st for exchanges and other crypto businesses, which is an interesting topic in itself, because of maybe the China flow of money into Hong Kong to purchase crypto now because it's obviously banned in China. So it'd be interesting to see how that goes, but a lot of the exchanges don't make any money. I think it was in our funds chat, Sammy. The exchanges, like, unless they're doing serious volume of trading, they're losing a shit ton of money. And that's why through the bear market, the real bottoming of market, a lot of exchanges had to fire a ton of people. A lot of exchanges folded due to liquidity issues. So it's they make a lot of money in good market conditions.
Bittrex went under as well. Like that's an OG.
Yeah, I think
Bittrex went under.
Well, that was interesting. I think I read a bit further into that, and I don't know if they went under due to liquidity issues or if they chose to exit the US and focus on Bittrex Global because of the regulation challenges imposed upon them, which is another area that I find particularly interesting, because if the US tighten regulation and oust all of these exchanges, they're going to be fucked. If they really push the hammer down on crypto-based businesses in the US, then they're all going to leave, and they already have started doing that anyway. So a lot of the smart companies that open up, they will start to receive a lot of value, and that's why Hong Kong's jumping on board. The Hong Kong got smashed through COVID. Everyone left, and then they had the riots. So all of the high-level financial people, IT people, that's what Hong Kong is, right? Yeah. All those people left, and they're like, how do we make Hong Kong great again? We find a way to pivot into crypto, and we try and bring in a lot of Chinese investment because it's banned there. It's a very strategic play. Hong Kong runs its own legal standing, but they're still part of China now. So that's the only concern that I have. Whilst they might not be part of it, they still are part of it. And I was trying to understand the legal side of it more, because I feel like China can just bring down a sledgehammer on Hong Kong and say, we overrule, this is our thought and opinion. So I'm skeptical until I see it works in Hong Kong. someone from the US put in one of our messages. It just made me chuckle because it helps me to understand the kind of news outlets and what they're posting in the US. And it was like, I heard there's going to be an $18.7 trillion US bank run because crypto is now opening up in Hong Kong and it's going to suck all the money out of the Chinese system. And I was just like, oh my God, what kind of marketing have you been reading? And I think it's a really good point I wanted to raise with them, but also everyone listening. The whole just coming back, I've frozen on a lovely image there. The whole point of the write-ups is marketing. Marketing has to sell. If it doesn't get clicks, then people are not making money. These businesses work off click-through rates. That is how they operate. And if you're not getting the click-through rates, they're not making money. Therefore, they need to fucking post shit that people are going to click. So you must bear that in mind, because I see it all the time. And this is the perfect example to prove this, is what's just happened in Bitcoin with the magic wallets moving money and this fear panicking. How many people do you reckon clicked that article? Like, I would say hundreds of millions of people. So how much money have they just made through those articles? Fucking tons. If a business wants to boost its revenue, what do? They go and put out some smart fake news that people are going to click. It just seems to be the go now. So I just want to really, I want people to keep that in mind, because when I read that, my jaw hit the table. I was like, holy shit, what kind of stuff this guy been reading? It's like, where did you source this credible information from? It's wild. It's actually wild. Like, don't get me wrong, I think Chinese economy's in a very dire situation, and people might be looking for a different way to secure their assets. Do I think they're all going to magically flee the traditional system all of a sudden? It implodes and everyone goes to crypto? Of course not. No fucking chance. They're going to seek other asset classes alongside crypto, but do I think they're all going to pivot into crypto? No.
They have they have capital controls. It is complete nonsensical to say that the average Chinese citizen can remove their money from a bank and deposit on exchange and buy crypto to escape the system. The Chinese government want to, and that's the problem. And Tristan, you're all over it with the surveillance side of things and CBDCs. Like, we've done extensive research on this. There is, like, they've got such a iron grip on the financial sector over there. It's just not. I think that line and that clickbait stuff is just ridiculous. But
it's wild.
Yeah, but what you were saying before was really interesting about the US just basically pushing all this innovation offshore. We're seeing like this renaissance of the mercantile city-state system, which is really refreshing. I think Singapore, Hong Kong, UAE, even London, these kind of city-states and old mercantile powers, they're starting to embrace what is on the cards here. And the United States are clearly seeing the US is pushing this aside, and the US is shooting themselves in the foot in a lot of respects with the US dollar and different things. So they're not really doing very smart strategic plays here, but regardless, it's going to thrive and survive really strongly outside of the US borders. And I think it's going to take an election cycle. And we were discussing previously, just mentioned how RFK, Robert Kennedy Jr., is now going up against Biden. He's pro-Bitcoin. And then on the opposite side, you've got Trump's challenger, Ron DeSantis from Florida. He's actually pro-Bitcoin, anti-CBDC as well. So we may have the actual eventuality in the US where, yes, it looks pretty bleak that they're pushing everything outside. But if the next election cycle is dominated by two candidates that are incredibly pro-crypto and anti-surveillance, anti-CBDC, I mean, and even if Trump or Biden win again, you're still getting this out there, and it's just growing with the masses. Eventually, this is a grassroots level kind of revolution that is just going to continue to grow, and eventually it'll be politically unviable. Like the Senator Elizabeth Warren's of the world, she's marketing her campaign as an anti-crypto army she's putting together, as the dumbest thing I've ever heard, because 30% of the entire population of the United States, according to surveys at least, has had some interaction with at least owns crypto. That is so stupid. I mean, I'm incredibly bullish for the longer term, but this is just that period of growth and turbulence that we get, the fight you stage we just have to get through. And sorry, I'm digressing here, but you look in South America, I think that is, and Africa, those are the places where this is going to take off at light speed using Lightning Network. And at that grassroots level, we've got Argentina, which has you know, 100+%
mining.
inflation. Yeah, volcanic mining, you'll say, but Argentina, they have 100+% inflation. And the guy leading in the polls right now for the next presidential election, he is pro Bitcoin and he wants to bring it in as legal tender. So they're looking across the border, a few borders away at El Salvador, and seeing what they're doing. And they're like, okay, you know, we don't want to be held hostage by the IMF anymore. We've got 100% inflation. What is the difference? Let's try and do something different. You know, all those nations that area maybe want something different. They're energy rich, resource rich. Let's go get it. So,
and nothing to lose.
Nothing to lose.
It's like, if our economy is already bust, how much further backwards are we willing to go, or can we go? We must pivot, and we don't want to be held hostage to the US dollar, because they're just puppeteering and printing and causing further challenges. It's wild. Like, the more they print, the more it harms the people that have debts to the US. So it's just crazy. It's a crazy cycle. For those guys to exist in. What I see in the US right now, the way that I would describe it is, there's the traditional powers that be that have the traditional mindset and a traditional system, and they're being challenged by a new technology, and they don't want to change. They're not ready to change. And I'll put my tinfoil hat on, I should say, for a second, but they're being puppeteered from the top, because the traditional system is set up to benefit those at the top. It's not set to benefit those at the bottom. Whereas this new system is set to benefit everyone and give freedom and opportunity to everyone. And it means a loss of control. So I think when that loss of control comes to fruition, it's a scary reality for those that are currently in control. So it's, and it's like, it's a big reason why I like crypto has been such a journey for me. And I think it is for a lot of people that get into it. You get into it because you think you can make a ton of money. Then you realize what crypto actually is. Then you realize the power that it can bring to the people, and how it can create this like harmonious outcome for everyone involved. It's been such an incredible journey for me. And that's why I'm so passionate about helping other people through that journey of realization, the epiphany that you get, that light bulb moment one day where it's just like, whoa, this is way more than what I first anticipated and realized. And then you learn more about how the traditional system is everything but what crypto is, and why crypto really exists. And it's just it's a very freeing path and journey to be on. And like, I've got so much money in crypto, if I can make your eyes bleed if you knew, in comparison to what I have in traditional money. It's because I back crypto. I back the system that be rather than the system that is. So interesting journey.
Well said.
Tristan, why don't you share some stuff around the fundamental analysis piece that you just released for the newsletter? Because I guess that's what this chat originally was, is an extension of the newsletter. Do share, because that comes out today.
It comes out in a couple of hours, and it's good because I can do a nice extension on the back of that very well put speech just there. Because I think if we're banking on crypto for the future, we need to basically accept that scalability is still an ongoing issue, and there's barriers to entry based on complexity. So all of us, plus everyone else watching this video who are into crypto already, you're already like at a massive advantage, and you mightn't quite realize it, in the sense that right now where we may have more or less sort of hit the peak in terms of the current capabilities of the blockchain. So I look towards one of the latest ones to come out, only came out on the 3rd of May, I think the token was launched. That was Sui. So Sui is really interesting. It's got a pretty decent team behind it. It's the Facebook Meta team when they were working on the Libra/Diem blockchain. They faced like heaps of regulatory hurdles, because basically Facebook had implemented their own blockchain. Like, they could have, so like I can see why that didn't take off. But a couple of factions within that developer team had branched off. One did the Aptos blockchain, which many of you may have heard of, and the latest one is Sui. So Sui is a directed acyclic graph, so a DAG. So you guys would have heard about DAGs before. I've done them previously in the FAs, many of which are hybrid DAGs, and this one is as well. So the idea with this one is that it bypasses like consensus and like makes basic transactions like super quick. And most of the consensus energy goes towards smart contracts. So how they do this is that basically instead of there being like accounts and tokens and assets on a blockchain, there are only objects. So there are things that are called objects as opposed to having smart contracts. So basically ownership is programmed into the object as opposed to the object being an asset within an address. So it's a really super interesting design, object-centric design, which again, you guys will basically read about should you open the newsletter once you receive it. And the other part that I'm quite bullish on as well is, no worries, catch your scoop. So the part I'm really bullish on is the concept of ZK logins. So there's this idea getting around that we can rejig developer decentralized applications so that the user can basically sign in with a Facebook or a Google login. So I think this is absolutely going to be critical for ongoing adoption to get people into to crypto without even really knowing that they're on the blockchain. That's always been my thing.
Yeah, it's the secret sauce, isn't it?
That is the secret sauce, 100%. Like that's always been my thing. If you can get people onto an application and they hardly even know that they're actually transacting on a blockchain, then you pretty much already are in a really strong position. So with these ZK logins, you won't need seed phrases. So seed phrases go out the door. It's zero knowledge proof. So you have to have proof of ownership for the account, and then you can access the resources. So I was chatting with Joe about it before. There's probably going to be, 10 different projects with 10 different implementations of what's known as account abstraction. But I think it's going to be one of the bigger catalysts when we do reach the next bull market. In the event that this technology is ready for the next bull market, I think there is a probability that most people are going to enter cryptocurrencies for the first time through a ZK login, because it literally just becomes a matter of them clicking sign in with Google as opposed to install this app, record your seed phrases,
download the wallets, and
download the wallets, create an exchange account, all these different things. So the extent to which this process can be simplified is the main reason why I think it'll be an interesting one to watch for sure. And hopefully you guys will get some enjoyment out of reading it.
Yeah, that's fantastic. Thanks for sharing that. Have you got any parting comments that you want to share before we close out the session, mate?
Nothing to add other than what we've already spoken about. Just everyone keeping frosty, not exposing themselves to too much risk and aping into meme coins just now. Just respect Bitcoin in the liquidity flow cycle, and she'll be right, as they say.
Yeah, awesome. Love it. Well, thanks everyone for tuning in. I really enjoyed this session as always, and we hope you did too. What I will actually share very quickly, which I was going to share, we have our new technical analysis product coming out very, very soon. So Steve, who's our our technical analyst at CCI, has been working in the background to put this together. So if you're not aware of this or you're hearing about it for the first time, the launch will be coming very, very soon. We're doing all the testing. You come into it, you get verified. There's a welcome video in here. There's 3 levels. So level 1 is technical analysis videos based on Bitcoin, Ethereum, US dollar, and gold. So these are the analysis videos that come out in here 3 times a week. And then there's a general chat channel. Level 2 is analysis videos, which will be for, and they come out twice a week on a Monday, Friday. They will be for the altcoins that we're invested in, that we're looking at. And there's a general chat channel around them. There's an automated news aggregator in here that will deliver what we believe is the most important news information from places like Glassnode. We think Glassnode is really, really good quality information that helps you to understand what's going on in the market, and some really good write-ups in there. And there's macro environment as well, which we believe is a really important area to understand, PPI, etc. So you'll get access to all of this information. It will come out instantly, and often this information will be through Twitter, which means that you'll get it ahead of what the masses will. Twitter comes out before typically what mainstream media does. Level 3 is signals, so automated signals to level 1, which is Bitcoin, Ethereum, gold, and US dollar, and then automated signals for level 2, which will be for altcoins that we're investing in. And that'll just tell you the buy and sell levels to enter into the market or stop and sell out of the market. So that will be launching any day now. Really excited to bring that to you. I think it's a fantastic product run by Steve, who's an absolute whiz when it comes to TA. We all certainly look up to him at the mastermind level with his insights and what he shares. So yeah, excited to bring that to you guys, and keep an eye out for it, and we'll be sharing that very soon. Thanks everyone for tuning in. Thanks Tristan for your time and insights as always, and everything that you do for the CCI community, mate.
Too easy, guys. Until next time.
Over and